In this video, I'm going to go over 3 stocks that I feel are undervalued and oversold that might be worth adding to your watch list and keeping an eye on. So let's get started. All right, so the first stock should come at no surprise, and that is a Google stock. I made a video on this actually not too long ago, and in my opinion, this is one of the most undervalued stocks there is to buy right now. You can see that this thing has been selling off pretty aggressively, and we are getting a bounce right at the support line that I had mentioned in my previous video, and it looks like we might start to bounce. Now, the technicals on this aren't looking too bad. I mean, you can see previously, we get down to this 200 moving average and we bounce off of it. We pierced under it here and then got back above it and held. We're back under it again. So when it comes to a technical standpoint, we want to see this get back up above here and hold this level. All right. Now, also want to quickly take a look at the forward price to earnings, and you can see it's currently trading at 19, which is, I would say, close to the average that it's been selling at the past year. It has dipped below that a little bit, and then you've seen it trade higher before. But to put things in perspective, you have other stocks in the same industry that are trading at a much higher forward price to earnings, somewhere in like the mid to high 20s and even closer to 30s. So when it comes to the Magnificent Seven stocks, this is the most undervalued one that there is currently. And in my opinion, absence of a recession, which obviously is always possible, or a market crash, I do feel this is a great time to start accumulating some shares of Google. And one thing I like to keep in mind too is in the event of a market crash, right, investors are going to start looking for undervalued stocks, in my opinion. All right. And Google, I believe, meets that criteria. It doesn't have this crazy valuation that it's trading at. It's actually reasonably priced right now, and it has a lot of growth potential as well. But I'm not going to go into much depth in this video. I just want to bring these stocks to your attention and do a quick analysis on them. So moving on to the next stock is Elf. All right. And I wanted to mention some stocks that aren't talked about as much, right? These aren't the meme stocks and the most popular stocks, but they're definitely stocks to keep your eyes on. All right. Now, Elf is, wow, look at that chart. It's been a falling knife, has been a bloodbath, especially if you were invested up here. And I like to mention this because, I made a video on Celsius too, and you can see this double top right here, man. It is like a picture perfect double top, and it just went into a crazy bearish trend after that. But in my opinion, again, we are reaching some major support here at $57, right? And if we go into the analysis of this, you can see the low price target is $70. Keep in mind, we're not trading off price targets by any means, but it's not a bad gauge to look at because obviously if, analysts are bullish on a stock and they're projecting it to grow sales and whatnot, it does give you a good idea of where the stock might end up in a year or so from now. So again, you can see that the low here is 70 and then the mid price is 95. I don't pay too much attention to the highs. That's usually a very, very bullish analyst up there. But nonetheless, we are below the lowest price target there is. But let's look at Elf's forward price to earnings. You can see that it's currently trading at an 18 times forward earnings. All right. Where, previously, this thing has been trading as high as 63 times earnings. Right. And then let's say on average, the lowest that it's really gotten is like, 30, about 30 times earnings, right? Now we're trading at 18 now. Okay. So I do feel that not only obviously does this stock look oversold, Jesus, this thing has just been a bloodbath. But when we're looking at the analyst price target, we can see there's some upside there. They're expecting this company to grow. And when we take a look at the forward price to earnings, again, you can see that Elf stock is currently, cheaper than it's ever been to purchase before. All right. Now, one thing that I want to mention with Elf stock, all right, I mentioned, Google, aside from a recession, I feel that that's a good buy, or at least start accumulating shares. I never just recommend going all in on a stock. Always, dollar cost average into it. But in the event that there's a recession, investors are going to start looking at undervalued stocks, right, that have a lot of upside. I like Elf Beauty because if you're not aware of Elf Beauty, by the way, they are, a beauty company that sells more affordable makeup. All right. It's like you have, Estee Lauder, which is your premium, and then you have Elf, which is still good quality, but not as high of quality, right? I like this though because I don't see women or anyone that uses makeup to just stop, even in the event of a recession, right? Do you see that? I mean, let me know your thoughts in the comments. Whether you are a female or a male, do you see people just stop using makeup altogether? In my opinion, no. Now, what I could see happening in the event of a recession and hard times, right? Think about this. Elf is an affordable makeup brand that is also decent quality as well. So, if you're not going to stop using makeup altogether, you might decide that, hey, I'm buying some very, bougie, expensive makeup right now. Maybe I need to just buy something more affordable, right? They're not just going to stop using makeup altogether, but what they might do is, go with the more affordable option. And that's another reason why I like Elf stock, because that's what they are, right? They are the more affordable option when it comes to makeup. Not to mention the quality is good too. And then again, I'm not getting into, the sales growth and, net income and the fundamentals of the company today. But, all in all, I think this is a good company that has a ton of growth potential, right? And it's something to definitely put on your watch list and keep an eye on. All right, moving on to the third undervalued stock is going to be Enphase. Okay, so sure, you probably heard of this stock. Again, this has been a complete bloodbath. Everything is going against this stock right now. Any of the energy stocks, because interest rates are so high, it's killing the company, right? But in my opinion, and let me know what you think, I feel that solar is definitely going to be the future. And I think there is a ton of potential for Enphase. And I mean, when this thing gets moving, it moves quick. But once again, we are at some major support down here. I will say we just recently broke this support line, right? And this made a new low. And you can see, I mean, Enphase is up 7%. It was up almost 10% earlier today. We're probably going to get rejected off of this EMA right here. But nonetheless, I'd keep your eyes on this because I promise you I've been watching this stock for a while. I'm sure Enphase is going to fall all the way back down here. You could probably get it, down closer to the low 50s. And in my opinion, I think this is a good one to start dollar cost averaging in, because when things start moving in its favor, I think this is going to move quickly, and it's going to be in the long term going to be a good investment. But again, let's look at the forward price to earnings of this stock. I mean, it has been obviously a bloodbath, as I mentioned, but we are now trading at 17 times earnings. All right. I mean, it's getting pretty freaking cheap. You can see the lows previously, right, was 26, 24, 25, like the mid 20s, low 20s, and now we are down to 17. You can also see this thing was trading at a forward price to earnings at 60 at one point, right? Because this is the thing with Enphase, there is a ton of growth potential for this company, but the environment right now is just terrible for it. Again, the biggest thing is high interest rates, and it's hard to go sell solar panels when it's going to cost you a fortune to finance them or lease them in that matter. And one thing I wanted to mention when it comes to Enphase, I've seen a couple other people make videos on this, and I found it very interesting. But they pretty much said that no one knows what Enphase is. They don't know what product they offer. They don't know anything about it, right? And it's hard to really promote a company and to get people on board with your product if they don't even know what the product is, what's the benefits, how's it work? They don't know any of that. So I think this is a big disadvantage when it comes to Enphase. However, if they can somehow get on board with that and be able to market their product better, especially with the younger generation, right? I definitely think this could catapult them even more. But again, I want to keep this video simple, and looking at the technicals, again, it's not looking good. I'm not going to lie to you. I mean, this is definitely not something you just want to get in and hope you're going to make a bunch of money right away. But I think it's getting super freaking cheap at this point where it's worth to start dollar cost averaging down here. and holding this thing for the long term. Because again, once it starts to move, it moves quickly. That's all I have for you guys in this one. I hope you found this video helpful, and I'll see you in the next one.